Hello, I'm Craig Brailsford, and welcome to another episode of Small Stocks, Big Money. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Now, today's show features interviews with executives of two public companies. First up is Alliance Entertainment. Alliance Entertainment is the global leader in physical media distribution, acting as the crucial gateway between major content producers and retailers. The company partners with nearly every major film studio, music label, and video game maker, including Disney, Sony, Universal, Warner Brothers, Universal Music, Sony Music, Warner Music, Microsoft, and Nintendo, to distribute their products to retailers worldwide. With more than 325,000 in stock SKUs, Alliance supplies major retailers such as Walmart, Amazon, and Best Buy, as well as thousands of independent stores. We'll learn more when we speak with the CEO later in the show. Up next is Nova Minerals. Nova Minerals is a gold, antimony, and critical minerals exploration and development company focused on advancing the Estelle project, composed of 198 square miles or 514 square kilometers of state of Alaska mining claims, which contains multiple mining complexes across a 22-mile or 35-kilometer long mineralized corridor of more than 20 advanced gold and antimony prospects, including two already defined multi-million ounce resources and several drill-ready antimony prospects with massive outcropping stibnite vein systems observed at the surface. We'll learn more when we speak with the CEO later in the show. Now, before we get to the first interview, our quote of the week. It comes from the book Small Stocks, Big Money. Be patient when buying. It might take 6 months to accumulate a position. You should be in for the long term. And remember, 20% of microcaps go to zero. This quote comes from Buzz Heydke, Mid-South Investor Fund, and it is featured in Chapter 9 of Small Stocks, Big Money, a book of exclusive interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon today for just $18. Now, let's get started with our first interview today with Alliance Entertainment. Hello, today we have Bruce Ogilvie, Executive Chairman of Alliance Entertainment, trading on the NASDAQ under the ticker AENT. Bruce, welcome.
Thank you, Craig. Pleasure to meet you.
Pleasure to meet you too, Bruce. Alliance Entertainment, a leader in the entertainment distribution industry. Can you briefly introduce Alliance to our audience and tell us about what sets the company apart from other players in the entertainment space?
Well, Alliance Entertainment, AENT, has the widest selection of entertainment products that we can offer any retailer, online retailer, omni retailer, or consumer. We carry movies, music, video games, and collectibles. And these are all the big superstar artists and the best movies, best streaming services, anything you can imagine, as well as any collectibles you might want to bundle with that or have that part of those entertainment offerings there.
Now, we've seen a significant shift toward digital content and direct-to-consumer models in recent years, Bruce. How has Alliance Entertainment adapted to these trends, and what opportunities do you see in the digital and DTC spaces for your company?
Yeah, there's two areas there. You have digital and you mentioned direct-to-consumer. I'll take direct-to-consumer first. It's no secret that the consumer is shifting all their shopping patterns, going to an online retailer. And you have these brick and mortar retailers or omni retailers that have physical stores. At the same time, they want to be as good as Amazon. Where we come in is we become the hamburger helper. We make them better retailers. We expand their selection. If you go into a store, their selection's only as good as what they stock there, what they carry in their DCs. But if you want to be on a level playing field with Amazon, you need that long tail selection. And that's where we come in because we have 325,000 titles we actually stock that we own, have in our building, ready to ship. So we can help these retailers, light up that buy box button on their website. They're saying available in stock and we can ship now. That's the secret sauce to us, having that big long tail selection. 40% of our business is direct to consumer. And that's where we're shipping directly to the consumer on behalf of our own retail brands that we own, or all these omni retailers that we sell to. And when it arrives at your doorstep, you think it came in from a Walmart or Target or Best Buy, but the reality is it came from us because we white label the shipment to make it look like they shipped it, and that's us. The middleman you could never get rid of.
Now, Bruce, you were telling me offline that the background currently behind you is a partial view of one of your distribution centers. Is that right?
Yeah, this would be the top floor of a couple of mezzanines that we have, Mezz 1, Mezz 2. And this is all that long tail selection of physical media there. These are the the onesies, twosies that we order so much of as far as direct to consumer. We also have really large bulk quantities. We carry 10, 50, 100,000 of a big new release like a Taylor Swift or something like that. So yeah, we have the scale as well as the nimbleness to ship out these onesie orders out to the consumer.
Now that leads me to my next question here, which is the investments that your company has made in large-scale automation. How are they driving new efficiencies and cost savings for the company?
We've always leaned on technology. That's our strength, service technology. And the thing for technology we need is that we have to use that technology to lower our fulfillment costs. Labor, we certainly learned during COVID, how hard it was to get labor at a time there. We were open the entire time during COVID. We were considered an essential company, essential supplier. So, we had a pretty impressive time there with consumers locked up and wanting movies, music, games to entertain themselves at home. But at the same time, it was hard to get labor. And we'd found a company called AutoStore, which I call the Rubik's Cube of auto storage retrieval systems. Pretty impressive. It's worth checking out. Basically, you have all these totes stacked on top of each other, and they eliminate aisles. And think of a tote as a shelf location. Instead of the human being walking around our warehouse through the mezzanine to pick something off the shelf, the tote comes to that processor and they pick it. That automation lowered our headcount of picking vinyl from 41 employees down to 7. So it's a big labor savings for us there. So yeah, having automation is low. And if you look at our 10K RQ, and just look at the year over year, you'll see that our overall savings and fulfillment costs are down 1% because of the type of investment we made in automation.
Now, Alliance has a very strong history of acquisitions, as you know, Bruce, having successfully integrated more than a dozen companies. Give us your acquisition strategy, and I want to know what kinds of businesses or technologies are you looking to add to your portfolio, and how do you see them enhancing your overall growth strategy?
Well, obviously, as you said, a long history of acquisitions, 20-year history there, went from 18 million to 1.4 billion. That was all because of acquisitions. And we always look for either competitors that we're looking to sell, other businesses that would complement what we were not currently doing, or customers we were not serving. And so, we have a long list of opportunities there is where we could look at our current customers, current suppliers, or competitors that we compete with. And we're just looking for ways to diversify and diversify our product line. Where we have the infrastructure in place with all these online retailers, where electronically they're connected to us. It's just a matter for us looking for additional companies to acquire to give us additional products to distribute. And offer those customers there that we currently have, as well as the consumers that we sell to represent. So that's what we're looking for. As far as what we do to keep on course. Historically, we kind of use first thing we find somebody we like. We ask for the financial statements, and then we try and build the model of what's the standalone EBITDA number for this company as a standalone. And then we say, okay. And then the next thing we try and figure out what is the working capital requirements for this business? How much working capital does it need to operate? So we call that the PEG. So we figure out what's the EBITDA multiple. What's the EBITDA? The multiple we like to use is about a 3x multiple there. And then we have the PEG. And with all of those, we can then determine, okay, we'll make an offer price of 3 times that EBITDA number, whatever that is. We'll have to set the PEG at a number which we call a 12-month working capital number. The average working capital number is looking backwards at what time the peaks and the low, and then convincing the seller to carry some type of paper or debt or an earnout that pretty much ensures a certainty closure with lenders. And then now, being a public company, we have the ability to offer stock, which is something we never had before. Not that we're going to go crazy with it there. It has to be accretive to our earnings for anything we buy there that makes sense there. So that's kind of our whole formula.
Now, the total addressable market for your company, it must be huge. How big is it, and how much can Alliance get of it?
Well, if you take all the categories of products we sell, we have movies, music, video games, and collectibles. You're looking somewhere in the neighborhood of total products being sold in the U.S. between $10 to $12 billion worth of commerce being sold, the physical media. And that's, of course, that's movies, music. And when we say hardware and gaming, we're talking consoles, we're talking controllers. We have the retro arcades that we sell there. So we have a pretty big basket of products that we offer and sell. Us being the entertainment experts of selling entertainment, and we bring entertainment to you. So that is where we can. Right now we're occurring like 1.1 billion in total revenue on a rolling 12 months. And so we still feel we have a long way to go. Our opportunities right now is the movie industry, as they are in the, I should say, the big studios like Paramount and Disney. They are looking to get out of home entertainment. When I say physical media, where they sell it to the retailers and deal with all that, we're very heavy in that area there. We want to lean in more, and we're seeing the opportunities that we can license that content. And take over that distribution and be the exclusive seller of those studios. And it's just part of the transition as these large, big, IP companies with all their content. If 90% of their business is digital in the form of streaming or premium downloads of some kind, why do they want to mess around with 10%, in physical media and have that infrastructure where they can just license to a third party like us? We would pay them a royalty on the sales we make, give them a small advance. Everybody would be happy in the process.
Leadership, Bruce, key to the success of any company, and especially a smaller cap company. Tell us about your team.
Well, we wouldn't be where we're at today if it wasn't for our team. We have, with all those acquisitions we did over the years there, we really acquired the cream of the crop. The industry was going through consolidation. We were part of that consolidation of helping the industry consolidate. And you just really, find out who are the doers and the getters and who can get the job done and the self-starters. And that's our team today. The team we have in place can operate the company. If Jeff or I was hit by a bus or something like that, or something happened there, they would pick up and just keep the company going right as it is. We wouldn't miss a beat there because it pretty much runs itself. As we've taken on this new responsibility to being a public company and doing all our shareholder duties and stockholder duties, we're not, I didn't say we have lost focus on our business, but it's forced us to go in other areas. Well, the team could step up and do all the functions that we were doing as we do these double duties.
All right, let me just give you this last question. The essential value proposition. Why should anyone take an interest in Alliance Entertainment right now?
Well, we feel we're extremely undervalued for the amount of revenue we're doing and how much EBITDA we have. And we also recognize that we probably are undervalued because we don't have enough float out there. We need to show quarters of really good performance and consistency, and we're well set up for that. There, we always knew we started as a SPAC. We de-SPAC'd. It didn't go as well as we wanted. We could have walked away from it and say, okay, let's not do this. But our ultimate goal was always to be a public company, so we'd have the ability to raise money and grow the company. It took us 20 years to get from that 18 million to 1.4 billion. We really feel as a public company, we would have the ability to raise capital and grow the company and grow at a much faster rate than we did the first 20 years. So the next 5 years, hopefully we can repeat what it took us 20 years.
That's a great story. Thank you for sharing it with us today.
Thank you.
Now, to get more information on Alliance Entertainment, visit AENTinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com, featuring emerging growth companies just like Alliance Entertainment. Watch this show again and explore hundreds of small cap stock videos on RedChip's YouTube channel. Also, go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, visit redchip.com and subscribe today. In addition to our newsletter, you can also order your copy of Small Stocks, Big Money, a book written by RedChip CEO featuring interviews with some of the biggest players in the microcap space. Order your copy on Amazon today for just $18. Now, let's move on to our next interview today with Nova Minerals. Hello, today we have Christopher Gertyson, Executive Director and CEO of Nova Minerals Ltd, trading on the NASDAQ under the ticker NVA. Chris, welcome to the show.
Nice to be with you, Craig.
Now, Chris, for viewers who may not be familiar with Nova Minerals, can you give us a brief overview of the company and its primary focus in the gold and critical minerals space?
Nova Minerals, we have the Estelle project here in Alaska, large project in terms of the land area, 200 square miles. We've been focused on the gold, and we've been very successful in that realm, almost 10 million ounces to date globally, and internal to that, economic resources of in-pit at $2,000 gold price of over 5 million ounces. But in addition to that, we've also had very exciting discoveries now of a lot of these critical elements, and the main one there is antimony. And so that's really another opportunity that we're pursuing here in Alaska at the Estelle project.
Now, as you mentioned, Chris, that flagship project, the Estelle Gold Project in Alaska, spanning a massive nearly 200 square miles. Can you tell us more about the significance of this project and tell us why is Alaska's Tintina Gold Belt such a promising location for gold exploration?
Indeed, the Tintina Gold Province is one of the most prolific belts in recent decades for gold discoveries and gold production, over 200 million ounces now documented here in the belt. This is the land of the intrusive related gold system. This is the land where we've all heard of it, the Alaskan gold rush. Now we're starting to realize where all that gold came from. And so the Estelle project just sits on the southern end of that belt. And we've been called, it's a trend, it's a gold trend, and we've actually been called the Carlin of the North. If your viewers are familiar with the Carlin trend in Nevada, you know, this made companies like Newmont and Barrick. And what we're onto here at Estelle is certainly very similar in terms of scale and potential resource endowment. And we've already seen that. So 10 million plus ounce deposits, not uncommon in our neighborhood. And that's certainly what we're onto at Estelle. That almost 10 million ounces that we've defined to date is across two deposits, Corbell up north, which is a bulk tonnage, very large system. And then down south on the property, RPM, which has really become the jewel in the crown, very high grade system there. And the company intends to focus. The beauty of the project is that it has great optionality in terms of how we attack this, how we develop it. So certainly the project ultimately is a large scale project that the major companies are after. Not many of these left in the world. But in this current environment, we also have the opportunity just to go after RPM first, which is our current strategy, lower capex, high margin, smaller operation, and then grow ourselves into the much larger project with that cash flow on our own or potentially a strategic partner, and we're certainly on their radar.
Chris, it just sounds amazing. Earlier in your interview, you mentioned antimony. I want to go to that now. Antimony emerging as a key part of your focus, particularly with the Stibium and Styx prospects. Many of our viewers may not be familiar with antimony, Chris. Can you explain what that is, why it's important, and how Nova Minerals discoveries position your company
and
to benefit from the growing demand for this critical mineral?
Economic numbers from that. We're a gold company, and we found gold at these prospects, Stibium and Styx, and you might say the antimony found us. And so I'm not sure if your viewers are familiar, but antimony is one of the most strategic and critical elements known to man that most people don't pay attention to or even know about. It's used in all the clean tech, green tech, defense tech, and the key one there is it's used in all the munitions. We produce no antimony in the United States. Totally import reliant on China and Russia, who have captured the market. And believe it or not, for our munitions, we import antimony. China has just announced that they are curtailing all antimony imports. This has drawn major concern and interest from the Department of Defense to establish and fully secure U.S. supply chains for antimony, and they see our project playing a large part in that, and we're pursuing that opportunity in the form of grants, these grant opportunities to get into production as soon as possible.
Looking ahead, Chris, what are some key milestones investors should be watching for in the coming months as Nova continues to advance?
We've just completed our last round of drilling at RPM. News flow coming in the coming weeks here with all the drill results, and then a resource update before the end of the year. And so I already mentioned the target 500,000 ounces at 2 grams per ton, very high margin material. Then also concurrently, we have a lot of these technical studies. We're laser focused on delivering a feasibility study to the market by next year, in 2025. That's a key milestone in this business. That opens up all kinds of additional funding opportunities. In the interim, there's also this antimony opportunity that I mentioned, where we're looking for DoD grants to commence production on that within the next 18 months.
Chris, I'm going to put you on the spot here. Is that okay?
Go for it.
All right. Now, what's the essential value proposition? Sum up for us. Why should investors take an interest in Nova Minerals right now?
There's no bull market like a gold bull market. Perhaps, maybe the antimony bull market currently happening might be even better than that. But currently, if you look at Nova Minerals, it's exciting time. We just listed on the NASDAQ. If you look at our North American peers with similar assets listed on the North American exchanges, these companies are running 3, 4, over 10 times, some of them, our current market valuation. And so that we believe coming onto the NASDAQ, once people appreciate our story, the scale, the opportunity with the gold and the antimony, once people appreciate that story, it's an opportunity for a re-rate for Nova Minerals. Currently, Nova Minerals market cap sitting around $25–30 million. And this is going into a gold and antimony bull market. Big opportunity for the investors to get in early.
It's the Alaska Gold Rush and maybe Antimony Rush for 2024. Great meeting you, Chris.
Pleasure.
Now, to get more information on Nova Minerals, visit NVAinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Watch this show again and explore hundreds of small cap stock videos on RedChip's YouTube channel. Also, go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, visit redchip.com and subscribe today. In addition to our newsletter, you can order Small Stocks, Big Money. This is a book written by RedChip CEO, featuring interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon for $18. Now, let's recap the companies featured today. First, you met Alliance Entertainment, AENT, on the NASDAQ. Alliance Entertainment is the global leader in physical media distribution, acting as the crucial gateway between major content producers and retailers. The company partners with nearly every major film studio, music label, and video game maker, including Disney, Sony, Universal, Warner Brothers, Universal Music, Sony Music, Warner Music, Microsoft, and Nintendo, to distribute their products to retailers worldwide. With more than 325,000 in stock SKUs, Alliance supplies major retailers like Walmart, Amazon, and Best Buy, as well as thousands of independent stores. Learn more at www.aentinfo.com. Then you met Nova Minerals, stock symbol NVA on the NASDAQ. Nova Minerals is a gold, antimony, and critical minerals exploration and development company focused on advancing the Estelle project, composed of 198 square miles or 514 square kilometers of state of Alaska mining claims, which contains multiple mining complexes across a 22-mile or 35-kilometer-long mineralized corridor of over 20 advanced gold and antimony prospects including 2 already defined multi-million ounce resources and several drill-ready antimony prospects with massive outcropping stibnite vein systems observed at the surface. Learn more at www.nvainfo.com. Now, don't forget to check out our stocks page. It is the biggest small cap stock portal in the industry. Every company listed on the NASDAQ or New York Stock Exchange with market caps of $2 billion and less. And it's categorized by industries. Watch this show again and explore hundreds of small cap stock videos on RedChip's YouTube channel. And be sure to sign up for our weekly newsletter and learn about a lot of small cap companies. Also, go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, if you have any questions about any of our public companies featured on today's show, call us at 1-800-RedChip or email us at info@redchip.com. In closing, remember, while small caps can provide significant gains, you must be prepared for the downside. Small cap stocks are among the most volatile of asset classes. Some of the companies featured on this show are RedChip client companies, and we may own stock in these companies, so please always read our disclosures at redchip.com. Thank you for being with us again today. We'll see you next week with some new, exciting emerging growth companies.